What is Bitcoin? Why is Bitcoin? And how is Bitcoin? In this video, I hope to answer all of these questions. So if you're brand new, you can make a informed decision. My goal is not to tell you whether or not to buy Bitcoin, but give you the information on telling you on what exactly is going on. So let's start off with, what is Bitcoin? Bitcoin is digital money that allows secure peer-to-peer transactions. It's a way of making payments without using a third party, meaning it is decentralized. You do not need a third party to do a transaction. But why is this important? To understand that, we first need to understand currency and how we have got to this moment. Most people don't have a basic understanding of what currency even is, other than this is how it's been and this is how it's always going to be. So what is currency? Currency is what is called a medium of exchange. This is what money is today as we know it. For this system, we use the barter system. So if I wanted to buy something from you, I might trade you a dozen eggs from my chicken. This is an effective system. It has many problems, such as, what if you don't drink milk? What if you don't need the thing that the other person is trading? Also, what if you're trying to buy something big, like a house? It would not be effective for me to trade 2,782 chickens for a house. What would you possibly need with that many chickens? So the history of currency goes like this. We started on the barter system, but when we figured out that that was not effective, we then moved to what we have today, which is a medium of exchange. This would essentially take our example. If I have a chicken factory, but I need to buy a house, but the other person doesn't need chickens, well, we would both agree upon a currency or a medium of exchange that we both agree is valuable, and we would trade that instead of the two commodities. Now, there have been many different flavors of medium of exchanges. We've traded seashells, we've traded beans, we've traded salt, which is where the term salary even comes from. That was your monthly salt allowance. We've had cattle. That's where the term collateral comes from. You measure what you're willing to put up and how many cows you would have been willing to put up. But each of these have their drawbacks. And the reason why we moved off of them ultimately boils down to a term which is called hardness of money. Hardness of money is defined by how valuable it is, how hard, how difficult it is to acquire this specific asset, how transmittable it is over space and time, and how much you can fractionalize it up and divvy it up. Some examples of money that would not be hard and why we've moved off of it. Apples would be an example of a currency that we moved off of. This is a valuable thing that we all agree is valuable, and it's easily transmittable / fractionalized, right? But it's not durable. It will not last 10 decades from now. So we couldn't use that as hardness of money. Ultimately, for a currency or a medium of exchange to be effective, it needs to be the hardest money that exists. History led us to was the gold and the silver standard. These, for all of history, have been the two hardest currencies that exist. They are both fractional, they are durable, they are transmittable over time and space, and they are difficult to acquire. There was a big battle back in the 17 and 1800s on which countries were going to go to either the gold standard or the silver standard. And ultimately, the one that was more hard than the other was gold, because the inflation on silver is about 4.5% per year. That's roughly what the earth generates or creates per year. And gold is about 1.8%. Thus, gold is more rare than silver. That makes it a harder money. But there are problems with gold. Directly, a lot of the United States prosperity is because they were the first country, or one of the first countries, that was on the gold standard. Its citizens has directly benefited from having the hardest money that ever exists. Gold is very heavy. In large quantities, it could be dangerous to carry around this amount of gold. If you try to cross gold over borders, there's a good chance if it's over a certain amount, it's going to get confiscated from you. Also, it's not indestructible. You can destroy gold. And I'm a fan of gold. I collect gold. I collect silver, as you can see. But there are problems with both of these. And Everyone knew this, and the governments knew this. So what they did was create a thing called a note. Okay, the US dollar is what we know as a note. And note is just that. It is debt. Note is debt. In fact, it says it right on the dollar. This note is legal tender for all debts, public and private. Okay, so what this is a medium of exchange for gold. It's a derivative of gold, or it used to be. Pre-1971, 20 of these equaled 1 ounce of gold. Okay, and that's why the United States dollar to this day is the strongest currency, because before 1971, it was backed by gold. The government backed it 1 to 1, or technically 20 to 1. For every $20 equaled 1 ounce of gold. And they had that in reserves that you could exchange at any point in time. This was just the middleman for the real thing, which was the hardest money that had ever existed, which was gold. Because the United States had the most amount of gold out of any country, and because the dollar was backed by gold, it became the world currency, the world reserve currency, thus making it the strongest currency that has existed. And this has led to a lot of the prosperity that the United States has experienced, at least your parents' and your grandparents' generation has experienced. But everything drastically changed in 1971. Richard Nixon removed the US dollar from the gold standard.
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
The piece of paper was not backed by gold anymore. This was a fundamental change in the US dollar, and it changed us from a note that was a debt for gold to what is now called a fiat. A fiat is a currency that is backed because your government says it's backed. It's not actually backed by anything other than them saying it's backed. We got you, bro. This is when the fundamental shift happened for the United States dollar, and when a lot of the problems started arising. If you're not forced to be held accountable for your actions and for your spending, what would cause you not to keep doing it? And this is a bipartisan issue. Both the left and the right love to spend money. In fact, all countries. This isn't even just a United States issue. This is a euro. This is a yen. This is a won. This is a ruble. Every single fiat that exists, the government is not held accountable for their spending. So if you're not held accountable for your spending, what do? They spend money. And boy, have they ever spent money. In fact, the national debt is over $35 trillion as of the time of recording this video. $1 million seems like a lot of money, but there are 1 million 1 millions in a billion, and there are 1,000 1 billions in 1 trillion. The United States has $35 trillion worth of debt. Well, why does that matter? It matters because from 1971 until today, the US dollar has lost 98% of its purchasing power. This inflation has been spiraling since 1971. The apex of this problem was realized in 2008. People my age tend to think that 2008 was just a thing that happens. The real estate market just so happens to crash every so often, and I'm waiting for the next one, but that is not reality. This was a symptom of the bigger problem of the currency losing its value. Essentially, what it boiled down to was banks were predatorily preying on people that could not qualify for loans today. Like if you worked at McDonald's, you could get a $400,000 loan, and it was a variable interest rate. These type of loans don't exist anymore, but the problem of inflation still does. Because of the distrust in the traditional financial system, of 2008, nobody went to jail. Nobody was prosecuted. In fact, the taxpayers bailed out all of these corrupt banks with their own money. Out of this fire, destruction, and darkness, Bitcoin was born. Everyone kind of innately knows that inflation is not good, and everyone kind of understands that their food bill has doubled over the last couple of years. Everyone kind of gets that, but it's way worse than you might imagine. Inflation only benefits those that have assets that are harder than everyone else. You see, it is a game of acquiring the hardest asset, and the hardest asset wins. So that brings us to Bitcoin. Up to this point, we have sort of outlined the history of